There's a monetary order. There is an internal political order. An order is a system of operating, and there's an international geopolitical order. All of these orders come to an end, leading to a transition into a new order. Throughout history, governments and systems have changed, often through significant conflicts, including wars, civil unrest, and economic collapses. The transition from one order to another is driven by five major forces. The first force is debt and money. Economies go through cycles where debt increases relative to income until a breaking point is reached. At that stage, the monetary order collapses and is replaced by a new system. We are currently at the brink of such a transformation, facing significant monetary shifts that will redefine global economies. The second force is the internal political order. Societies operate within cycles of governance, often split between opposing ideologies. Over time, differences in financial policies and values deepen, leading to internal struggles, sometimes even civil conflicts. We are in the midst of such a transition, where internal political systems are being redefined and reshaped by deep divisions. The third force is the geopolitical order. The world's rules of engagement are historically determined by the victors of the last major conflict. The global order is now shifting as rising powers challenge the dominance of declining ones. Historically, these shifts have been marked by tensions and confrontations, and we are witnessing a transformation from a unipolar world dominated by the United States to a more multipolar global structure. The fourth force is nature itself. Climate events, natural disasters, pandemics, and other environmental factors have historically caused more deaths and destruction than wars. They have toppled civilizations and led to significant shifts in global orders. The role of nature as a force in shaping societies cannot be ignored, and we continue to see its influence today. The fifth and final force is human innovation. Technological advancements have always been at the forefront of change, with new inventions reshaping societies and economies. Artificial intelligence, AI, is the latest and most significant technological wave, representing a historic shift toward digital labor. This transformation, worth trillions of dollars globally, will redefine industries and employment landscapes. In places like Singapore, we already see digital labor manifesting through robotics in restaurants and industries. AI is not just changing the way we work. It is revolutionizing global productivity and economic structures. The rise of digital labor is accompanied by a critical question: how will humanity adapt? Technology can be used for growth and progress, but also for war and displacement. The speed of technological decision-making is now outpacing human cognitive abilities, raising ethical and practical concerns. How societies choose to manage these innovations will shape the future. Looking at history, we see a pattern of excitement over new technologies leading to economic bubbles. The industrial revolutions, the dot-com era, and now the AI boom have all been marked by hype, followed by market corrections. Many investors overpay for promising technologies without evaluating their true value. This cycle is reminiscent of the late 1990s, when the digital revolution was unfolding. The same principle applies today. Owning great technology does not always translate into financial success if valuations are excessive. Meanwhile, the global economic landscape is precarious. Interest rates are rising due to supply-demand imbalances, making equities expensive relative to bonds. The AI race is driving massive investments in data centers, making computing resources cheaper and more accessible. As companies compete in the hyperscaler market, opportunities arise for businesses that can leverage low-cost computing power to build and scale new solutions. However, economic vulnerabilities persist. The United States faces a severe debt crisis, where the government's deficit must be reduced significantly to maintain economic stability. If spending continues unchecked, the consequences will be unavoidable. Historical patterns suggest that nations in such situations often resort to extreme measures, including debt restructurings, political maneuvers to force debt purchases, or even selective defaulting on obligations. These actions will have ripple effects across the global financial system. As history has shown, economic and political crises lead to drastic policy shifts. In the past, struggling nations have imposed tariffs, embraced nationalism, and increased militarization to address economic turmoil. We may see similar trends emerging today, with rising trade tensions and economic confrontations between major powers. The global economy is fragile, and how these tensions unfold will have lasting implications. While many countries will face challenges, history also shows that neutral nations often thrive during periods of global instability. These nations attract capital, talent, and innovation, positioning themselves as economic safe havens. Singapore, for example, has the potential to emerge as a key player by maintaining neutrality and leveraging global transformations to its advantage. The technological race is also a defining factor. While the U.S. leads in chip innovation, China is closing the gap, particularly in production and integration. China's advancements in robotics and AI-driven automation are shaping the future of industries. The competition in AI, chips, and robotics is fierce, and the outcome will shape global technological leadership. We are entering an age where digital labor, AI agents, and robotics will redefine how we work. As we transition into this new era, the role of leaders, policymakers, and societies will be critical in shaping a future that balances innovation with ethical considerations. This period of transformation presents both great opportunities and significant challenges. The question remains, how will we navigate this unprecedented change?